there's that $4 billion a day that's being traded. Who's trading it, and who ultimately needs these carbon permits or these assets? So we've got, I mean, what is it that's being traded? There's the permits, or in Australia, I think we call them Australian carbon credit units. So they represent, what is it, a ton of CO2 equivalent, and then they're also offsets. Can you tell us a bit about that market, who's in it, and what's being traded, please, Michael?
So this is a real area of confusion, Gene. So it's really important that we clarify the difference between various carbon markets, because there are actually three very distinct carbon markets, and they're very, very different. So
Mm.
this is very, very important. So the first market that most people are actually familiar with, and let's leave the Australian ACCU market, let's leave that to the side for a minute. I'm talking globally now. Most people are familiar with what's called the voluntary carbon market. Voluntary because it means it's it's a voluntary participation. A corporate can choose to buy these credits, can choose to buy these offsets. And here, Gene, terminology, we use the term credit and offset. In the voluntary market, it's a carbon credit or a carbon offset. In the markets in which we invest in a completely separate market, the regulated market, the compliance carbon market, where companies must comply, and those are called carbon allowance permits. So in the voluntary market, it's called a carbon credit or offset. The normal project here, Gene, is planting trees
Mm.
or trying to protect a forest or a mangrove swamp. It's some type of project related activity, and then an independent party will calculate how much carbon is sequestered from the activity. They give it a rating and they calculate the tons, and they issue these credits and offsets. I'm going to give you 5 key bullet points about this voluntary market. Very, very important. Number one, it is completely unregulated. Number two, it's illiquid. It's not a liquid asset. Number three, it's very small in size. I'll come back to that. Number four, because it's all of these different methodologies, it's very opaque and complex to figure out, well, how did they calculate these credits? How many credits? And number five, I think very important, in the voluntary market, there is effectively an unlimited supply of these credits. This is where, Gene, you mentioned in the last 9 months this year alone, there have been a number of investigative journalist articles that have uncovered practices in that market that have proven to show that some of the projects have not actually sequestered any carbon at all. And I think the key here, Gene, is that in any market, as an economist, you'll know this, when you have a financial asset without any financial oversight, this brings moral hazard into the equation, right? So if we can create more credits or offsets through a different methodology, we all benefit within that ecosystem, but there's no independent oversight of that. So the problem of overcrediting and sort of supply has become an issue. And so I think what we're seeing is corporate buyers of wanting to make a climate impact are now somewhat shying away from that market because they don't want to be involved in these scandals. So that's the voluntary market. If I move the lens to the regulated markets, Gene, I want to give you 5 key bullet points about the regulated market. The first one, of course, it is highly regulated because it is run by governments. Number two, it's very liquid. It now trades $4 billion every day. Number three, it's large. So when we compare the size, this market is traded last year about 1 trillion with a T dollars, and the voluntary market did about 1 billion. So this is a 1,000 times difference in size, not 10 times or 100 times. This is huge. And number four, it's very transparent, of course, these markets, because they're run by the government. So they put all the rules on the website. It's transparent. And number five, and most important, Gene, in the regulated market, the supply of the permits is capped. And every year that supply lower and lower and lower. So in one market, unlimited supply just keeps increasing. And in this market, it's capped and it keeps going down. So there's quite a big difference between these two markets.